Global energy investment to restart their stalled projects, which was there. So now 2012, BP is going to do that, and already in this particular region, if you see, there were almost Aramco, Saudi Aramco already last 2 years, they delayed their many new projects and their new wells. Now this is all going on. So these are good prospect, I can see that. Now increasing global energy consumption, as I was telling you, this is a growing population, generally growing per capita consumption from 80 to 2010 N. This is the figure. Now in between, of course, there was a dip after 2008. If you can see that, consumption expected to continue increase worldwide now, and which is, of course, again here, this is not my figures. I have given the source from Annual Energy Review. If it is a speculation, we all have to believe that. But this is the data till 2035, they say it will go up. So due to global financial crisis at the end of 2008, we have observed a global economic downturn in 2009. As per International Monetary Fund, global output fell by an estimated 0.6% in 2009, and then it picked up. And then again, as I was referring to, that due to imbalance in supply and demand for oil, we observed a sharp decrease in oil price from $140 to $40 per barrel price level in the first quarter of 2009, which is peaking now. The oil and gas sector is building up slowly as world markets pull themselves out of recession, and we have observed that the industry is cyclic in nature and subject to fluctuations in demand. With the demand for crude oil increasing, especially from China and India, as well as the need to offset falling output due to natural field depletion, oil and gas companies have plans to increase investment in 2012. Amid macroeconomic uncertainty and market volatility, analysts are putting the industry on a promising to bullish track for 2012. So this is globally offshore industry activities, as you see, is growing. New building deliveries, if you can see there. So I'll go more on industries investing in deep water, as I was telling you, deep wells and horizontal wells. More than half of rigs are not contracted for work when ordered that time. So now things are getting improved. Overall fleet utilization does not suggest additional rig requirement, so that's also there. Now if you see new build future deliveries with initiate for 25 years, these are jackups old and 25, which will come for 71. You can see the figures, and the shipping side, the floaters is 251, 25 years old. So of course there is a room always, and latest build cycle may accelerate fleet rationalization for some drillers. Energy vessels market cautiously optimistic. Oil companies throughout the world have been re-evaluating energy development, given a collapse in oil prices, which has made some projects uneconomic. Integrated oil and gas companies are showing an increasing reliance on very large projects to replace the more diverse existing production base. Demand is still strong for exploration and production rigs and offshore supply vessels, but market is moving with cautious. Lack of enthusiasm to commit to additional new builds. Market has seen a few cancellation and slippage. National oil companies have a strategic interest that differ from listed companies. Shortage of semi-submersibles, surplus of jackups, continued financial turmoil, prevailing low prices, and economic recessions are impacting activity level. Even if companies take a bullish outlook on a recovery in oil demand growth, declining revenues and unavailability of credit will limit their ability to invest in new build projects. Now let's see the offshore energy vessel sector. Now FPSO's delivery global, these are the figures by 2012, which is going to be delivered. So it means this year 9 FPSOs are delivered, and then 10 will be next year's. And these are the potential projects for FPSO in different areas. You can see that global new building project for jackup drilling rigs. So existing fleet up to end of 2008, it means before recession, was 445. And then if you see 11 and 12, in 11 only one jackup, which we are seeing that is delivered. Now global new building forecast for semi-submersible drilling rigs, again before recession 178. Then if you see from there, since order book was in 2008, 25 was delivered in 2009, then after that 2010 was 10, and so on, it's going down. And these are 4,000 feet deep drilling. So these are drill ship. Again, 43 was there before recession, and then still this year 14 has been delivered. Next year 7 is going to be delivered. So new gas discovery in the region have necessitated deployment of deep water drilling equipment. These are the major driver. And then offshore support vessel, very important. We can see all the platform, they need these vessels. So on the pipeline, if you see here, 208, 251 was the figure. And as I said, that's why I have not put here, as I said, that off the shelf, this is all available. So no one is willing to build new offshore supply vessels. This is again offshore support vessels, which 209, 10, 11, 12. So people are not willing to, whatever the order book it was, and it is coming gradually. And now this is the, again, OSV, and different comparison of global shipyard versus China. So China is taking the lead. Globally, the manufacturers or the yards, they don't have order book much, but China still, because of the rationals in terms of pricing, in terms of all other activities. Now this is the conclusion. I should say that we all know that 75% of the Earth's surface covers by oceans. And today 60% of the world's petroleum production comes from offshore operations in water of more than half the coastal nations on Earth. So it is no surprise that as onshore oil and gas reserves will deplete, exploration and production activities will extend into offshore basin, which has potential proven reserves. This is in turn will create opportunities for E&P companies, oilfield equipments manufacturers, shipyards, oil and gas suppliers, human capital, professionals, technology, assets to turn the tide from the doldrum it was in a year ago. Worldwide offshore industry is on a promising to bullish track. Energy demands wants to grow long term, especially in China, India, in the Middle East and elsewhere. Offshore accounts for 1/3 of oil production, which is up significantly, we can see from past. So we all have to manage risk for success. Thank you. Any questions? More than pleased.
Audience, please.
Yeah, I have questions. Yes, thank you. It was a good presentation, Mr. Aftab. Couple of points, in fact. First one is it's regarding the recession. Can we, because normally if you look at oil and gas sector, it's growing up. So does that mean, because we had a recession and after that we had the Euro recession as well. So can we, what's your thought, like is the recession over, and as far as the oil and gas sector is considered, and the downward slope is over and it's coming up? What's your feeling on that? And I have one more point along with that to highlight, because the oil and sector in Iraq, it's coming up. Iran, it's in a different scenario, and Libya is also coming up. So the scenario, it's going to change. And how this is going to affect the oil and gas sector and the requirement in the coming future? These 2 points I would appreciate if you could clarify.
Interesting and good questions. The second one is very interesting, little dicey to answer, but still I'll satisfy you. The first thing which you asked about the recession, whether, if I understood very well, whether we are heading out of recession or whether we are going towards double-dip recession. There was a speculation that we are coming up, but broadly speaking, if you're going to compare from 2006 or 2007 figures, still it will take some time because we have not finished our consolidation yet. If you finish your consolidation where we are, even if we talk about oil and gas industry, or if you talk about sovereign economy, which is built together, they goes parallel, because whatever we see here in this part of the world is a petrodollar. All the development which is taking place, which you see because of the wealth which has accumulated from the oil. Of course, as I was explaining, it all goes with the consumption. The drilling also, nobody wants to go and drill and just keep it reserved at their backyard unless you don't sell it. Because if you sell, then you get your money or your revenue which you have spent there. So today, since the drilling, which was in 2007 or before 2008, before recession, worldwide was going on, is not there. And we have to realize that fact. Now, I believe I gave you the answer. And if you understood, yes. The second question, which is Iran and Libya. Iran basically is not something at the globe which has a problem with the world. For a long time it's going on. It's not of today because of recession. But at the same time, the consumers are there. They don't comply US regulations, but at the same time, you have a UN protocol to the countries and they have to accept that. Iran is on sanction, we all have to accept that. And since Iran is on sanction, so no matter you isolate them from the global village, but it's a part of your village, and there will be sneaky situation. Still China gives eye to eye to all the big brothers, and still China is the best consumer from Iran. And then you see Europe at times, they were taking from Iran. At the same time, Europe again is the partner from the global fraternity. So what we are telling is that yes, Iran has been always there on the map, but we never saw that there was any change to their stand. What they have today, they have been in the past, and they will stay in future as well. It looks like until good sense prevails. Coming to Libya, yes, I do hope things are coming to normalcy. It will take a little bit of time, but things will come better because the whole world is extending arm to support Libya and to bring it to normalcy. Iran, as I said, like Iraq. Okay, Iraq, yes. Iraq, we have all onshore, very few offshore. So Iraq, yes. It looks like Iraq is coming also in a rapid way because I have few, I should say, very good partners from Iraq, which we are involved with. And I'm seeing that there are a lot of ENP activities going on, and at the same time, they are coming with a strategic partnership on investment as well, and they're extending arm to the world to come and support on a distribution sharing agreement. So that will be also better very soon, it looks like.
Sir, according to data presented, China is in blue shade. So it means they are potential consumer of oil. And what China was doing is that they were tapping African nations to meet their energy demands. So right now, situation in Libya and Sudan, that is not good. So how this African strife, that is going to affect demand-supply behavior of the market?
Are you talking about this data?
Sir, actually I'm talking that China was depending upon Africa.
If you link this, then I can refer which data you are talking about.
Sir, that was regarding the consumption of oil worldwide.
Okay, let me go there, then it will be better for you if you refer that. Are you talking about this?
Yes, sir. So China is second largest consumer of oil.
Yeah.
In that respect, what China was doing is they were depending upon African nations, like they were having so many development projects in Libya and Sudan, and instead of that, they were having oil from those countries. So now situation in Sudan is not good, even in Libya. So the demand scarcity that is arising from there, from where it is going to meet for China, especially for China, because they are second largest consumer of oil. So how this demand supply equation is balanced now?
Okay. First of all, please.
Yeah, no problem.
First of all, China, basically, as you said, that their consumer, it's not that China was is not predicted even in here. I can see that China is the major, but yes, China is significant in terms of consumption. As I said, like the significant, if I see, is United States, whereas United States versus their own world reserve was very 1.8% of the world reserves is in the United States, but number one consumer. Okay, now coming to your question about China. China, they have strategic alliance. China, they invest basically in a distribution sharing agreement with the countries for a long-term period, for a long-term gestations on the projects. If you see Sudan, which you are talking about, Aracas deal, which happened years back, China, they were the first one to get the oil when it was hit from the ground to reach to China, the crude, because they didn't have the refinery, and it all went through the pipeline to China. So China, of course, their strategy is to go to those countries where they are vulnerable in infrastructure, but they have enough reserve. And these are the areas where they invest on E&P. So it means somebody is willing to invest on exploration and production on a distribution sharing agreement. So the major risk China is taking with their investment, of course they expect also the return the same way. So they will do the same. This is their policy, and they've been doing that. Right now, if you see there is a dispute going on with India and China. What's that? Because China literally is trying to build a moratorium on particular areas of water that this belongs to us, which is not actually South China Sea, which they are talking about. So China, the story of China is that they will be spending always on those countries wherever the reserves are more, but they need money from other partners to drill and come there.
Thank you. Any other questions, please? Yeah, there is one.
Yeah, hello, sir. My name is Rahul. I would like to know, how the developments in the renewable energy sector is going to affect the oil and gas sector, if at all. You know, once a significant portion of money starts flowing towards the renewable energy sector, will that have an effect on the oil and gas sector? You know, do you have any figures as to percentage, you know, between renewables and oil and gas, you know, in terms of investment?
Of course, renewable energy is still, I should say, it will take some time. It is the last generation before Shell. People have been working for long years on renewable energy, but oil gas demand